Thank you very much, Bwana Speaker. I want to begin by congratulating all of you on your appointment and mandate from the people of your respective jurisdiction and indeed the people of Kenya to your new 5-year term in the context of the 13th Parliament. And Bwana Speaker, congratulations in a special way for leading us, and you please continue to lead us appropriately. It's also nice to be here because I have seen a lot of you on TV. So, and it's one thing to see you on TV, it's another thing to see, he's really tall, or vice versa, you know. So I think it's good to see you and to also begin the day and your term worried or thinking about the key issues of the economy. Your mandate revolves around the economy. And I think it is important to start with that, and I'm delighted to be with you. It's part of our mandate as the Central Bank of Kenya to be advisor to government. So I stand before you because you've called me to you. You didn't summon me. You just called me. And it's my responsibility to answer that call. And I want to assure you that as often as you call me, I'll show up. And I'll explain things, and I think Bwana Speaker can clarify, can actually attest that in his previous responsibility, when they called me, I was ready to talk about whatever they wanted. So we are there. So thank you very much. Now, I'll go rather quickly over some things, but I think we can open the discussion at the end of it. Although you can stop me if there's a particular burning question that comes to you about the economy. So the first point to make is Kenya is not a project. Okay, Kenya is not a project. Those of us that think of Kenya as a project, I think, have a different narrative. The way we see it is Kenya is that ship there, you know? So it is we are on a journey, we are on a voyage. So really, MV Kenya is what we are talking about. And as it sails, there are certain things it wants to accomplish, the distance. So you have the dashboard. And from what you've been hearing and telling people during your campaigns, and etc., and also as citizens, economic growth is an important thing. You want to see the country growing. And we as economists just love to talk about economic growth. And we say it's 8%, it's 5%, it's this. But it's not the only thing that matters. You also have been talking about cost of living. That's another element in your dashboard. And also other things about health, education. For instance, I think a lot of you, even when you talk about the cost of living, how does it impact you? And I can assure you that it impacts you a lot because, let's say, somebody has a bill at a hospital and they cannot afford it. And then they come to you, etc. So the issue of health, the health outcomes and education outcomes are extremely important. And then infrastructure. So you have infrastructure, roads. We are talking about the various, even the SGR roads, but roads, not just new roads, even, you know, are the roads, are there potholes in the roads? Are they tarmacked? I think we have a whole set of issues. By the way, I see a lot of you writing notes, which is good. But I think I would also tell you that you will get the slides. We'll make sure that they come to you circulated appropriately. So, but anyway, it's good to write notes on this. But there are some things that hold us back. So this thing is sailing. But what holds us back? What draws us back? I think there are some things that, and the first, I think, is corruption. Corruption is a net loss to the economy. Yeah? So if you have, corruption will benefit one person, but it is a huge loss to the entire economy. So that holds us back. It's an anchor. I think we know that. There's a big net loss, which is pending bills as well. When you have pending bills, you know what happens. However they are created, however they are generated, it ends up, let's say the contractor, next time he'll price, instead of pricing it at 100, he'll price it at 120 because he expects that he won't get it on time, etc. And so there's a big problem there, and it also allows you, it's an opening for corruption, etc. So that's another issue. High inflation, another big problem, which holds us back. And then some of the things that may lead to weak institutions. So think of KRA or central bank or even the police when they end up becoming poor, meaning, or the judiciary. So they weaken, they cannot deliver on their mandate for whatever reason. And I think Kenya has an entire history of strengthening institutions and then breaking them, and then strengthening them. So we need to be sure that we protect the institutions through and through. I also wanted to talk about the poor environment that may be their environment in terms of the environment out there, but also other things like business climate, etc. So all those things hold the MV Kenya back from sailing. Now, the sails that are there in this boat, they are actually fiscal policy. There are three in particular: fiscal policy or fiscal, the outcome or the fiscal policy or implementation of fiscal policy, financial policies, which is more like ours. So fiscal is all about the budget, etc. We mentioned it. Financial is more about banking and so forth. If it is working well, if interest rates are working well, savings will happen. People are sure of their money in banks, etc. And also on the external side. So think of exports, imports, think of foreign currency, think of all those things. Those are the three sails in the economy. And if they are well trimmed, the boat will sail very quickly, despite there being, the wind not being strong, etc. But then there's another element there known as debt. And you can see it, it's the keel in the boat. The keel makes sure that the boat doesn't topple over, right? So if the wind blows it in a particular way, the keel makes sure that the boat stabilizes. But if the keel is too big, it can actually capsize the boat. And that's what happens when debt becomes balloons beyond compare. Then it becomes a problem that has to be dealt with. So the keel cannot just be randomly anything. So we have to manage debt so that it helps us instead of hindering us. So colleagues, what I'll do is I'll talk about MV Kenya, and some of these issues, I'm going to touch on them, and later on, if you want to have more specific questions, I can obviously deal with them. The slide that I want to show next is to show you where we are, where we were in July. This one, every 2 months, we do a survey of market perceptions, right? Now, you have a sense or a pulse of the economy in your jurisdiction, in your constituency, in your county, etc. We, every 2 months, take the temperature, the perception of people around the businesses, really, around the country. And we ask them, what is their sense of optimism in Kenya's economic prospects? We did this in July, just before the elections, right? And we had also done it in 2017, just before the elections. And what we found very interesting is in 2017, so it's banks and non-banks, but the results are very similar. In 2017, you remember the previous contentious elections, but it was even before that. Only about 26% of banks, and indeed only 35% of non-banks were were optimistic about the economy. So 25 or 35%. And indeed, in July of this year, It was just the reverse. It was about 80% of banks and around 73% of non-banks. So we are making the point that actually, even as we are coming to the elections, there was a lot of optimism in the country. And this is, in a sense, let's say, the break between politics and economics. So people wanted to just go out, do their economic things, etc. Even as you were doing the campaigns, etc., people were focused on their things. They're listening to you, but they want to go ahead with the economy. This, to me, is interesting. We are doing another survey now, and in about a week or so, or 10 days, I'll tell you what the outcome is of the survey now after the elections. So, a few issues. The economy, how strong is it growing? And the slide on the board now gives you details about the growth. Remember, one of the outcomes we talked about is economic growth, GDP growth as we call it. It's true, I've made the point before, and I continue to make the point that you cannot eat GDP. You cannot eat GDP. So even as we as economists talk about GDP, we need to temper that, because it's not GDP that people are interested in. The issue is these incomes that are measured here, are they helping people? That is the big question. But it's a way of looking at the economy in totality. And there you can see last year, even though last year was hard, that's 2021, or you can even begin in 2020. 2020 was the first COVID year. We grew. Actually, in 2020, we just were flat, 0.3%, decline of 0.3%, so flattish. And then in 2021, we rebounded at 7.4. And in the first quarter of this year, it grew at 6.8. And we are expecting that this year, we are going, and those are the numbers at the bottom, will grow at 5.4%. 5.4%, frankly, is a strong growth relative to other countries. It may not be the strongest that Kenya has delivered, but in the circumstances of the economic situation around the world, that is a very strong level of growth. I want to show you the next slide, which is just showing you a long-term trend of growth, and that is the dashed line. So it goes from 2010 to 2021. So 2021 is the 7.5 we mentioned. But you can see that growth rate has generally been around 5%. So around 5%, that's what it is averaged. That chart also shows you the contributions of growth, which are the sectors that are driving growth. And I think the one that really sticks out is the reddish one, the brown one, and that is services. So services really is, we've moved from agriculture, and now agriculture is the bluish one. You can see the services is the one that is dominating. So when we talk about ICT, when we talk about hotels and accommodation, trade, retail, etc., and all the other services, education, health, that is really now what Kenya is becoming. So we've moved away from sort of the one sector agriculture. It's still important, but we're just saying that it is interesting to see where the growth is coming from. Let's move on to the next. I mentioned in passing that the world is a rather harsh place today, very bad place. Meaning world economy, there are a lot of problems in the world economy. The first of this is that the world economy is likely to, the growth rate is falling, meaning it's slowing down. There's even talks about recessions, a recession in the advanced economies. And this shows you, this was done by the IMF. It's a standard table that most economists are familiar with, the World Economic Outlook. And you can see world growth, that's the blue column in July. July numbers was projected at 3.2. Actually, in about 2 weeks, they are going to issue a new projection, and we expect that 3.2 will be scaled down even more. The world is actually the world economy, the global economy is worsening dramatically. You've heard about inflation at critical levels, but even growth is shrinking in these places. I don't want to talk too much about this slide, but I just wanted to make the point that the global growth is expected to be weaker. And therefore, we in Kenya, we are connected to the rest of the world. We need to be appreciative of that and take the right measures. I want to talk about inflation in Kenya. One of the items that we mentioned a moment ago about the cost of living. And the dashed line is the number, the numbers that are announced and are circulated at the end of every month. So the last number was 8.5%, and that was in August. And we expect that this going forward, it will remain elevated around 8.5, maybe even higher, particularly given that there has been changes in the price of oil, petroleum, and that will push inflation higher. But that is well within sort of the scope of the things that we are doing. So we are not letting this go by its own. We need to be careful of the implication more generally, as you put it, on the cost of living. To be clear, the things that have been pushing up inflation in Kenya, first and foremost, is food inflation. Now, that is your various products, including the non-vegetables, but obviously a lot of vegetables in there, unga, sugar, etc. And then, of course, fuel. So next slide is interesting because we just talked a moment ago about 8.5. That's where we are in Kenya. What about the US? Where are they? And the US, if you look, that's the red line, they're actually at 8.3. So inflation in the US is exactly like us. In effect, and I'm going to use this line, that used to be us. So in the US, it's 8.3. In the UK, it's 9.9, and it's going to break 10. So it will be in the double digits. And in the US also, it may end up in the double digits. Eurozone already at 9.1. The point is, these numbers are, let's just say, anathema to the advanced economies, because they used to have inflation at 2%. They are trying to get it to 2%. Now they are way above us. So that's what I'm saying. That used to be us. When we are struggling with high levels of inflation, and they are on the low levels, and us and saying, look at the less developed countries, inflation is high there, etc. I think we can teach them a lesson or two, but let's keep it to ourselves for now. Yeah. So the bottom line here is that inflation has become endemic in the advanced economies. And we know why. First and foremost is the price of oil in those countries. Secondly is first was the problems with the supply chains that were there, meaning they were unable to deliver products as needed in the quantities, even timber and things like that. Prices were more than doubled, etc. As a matter of fact, the next slide shows you some interesting products in the global market. So, for instance, palm oil, that is the yellow one. Palm oil goes into your edible oil, it goes into the soap, it goes into things like that. Yeah, a lot of the household things. And if you remember, there was a time some palm oil importers or makers of edible oils were complaining about foreign exchange shortage, etc. Actually, what they didn't tell you is their problem was not foreign exchange foreign exchange availability. What it was is actually the price had really shot up in the global markets, and Malaysia had banned the exports because they wanted to protect themselves, right? So we had problems importing those things. But anyway, now the price has come down, and therefore you'd expect that the prices of those products or more, or whatever it is, the Blue Band, all those other products that are made, or soap that are made from this sort of oil will come down. I don't want to talk about too many of the others, but you can look at them. The point to make is that since June, the global prices of a lot of the things that we import has begun to come down. And it will continue, we hope. And so by December, we'll have much better landed prices. As a matter of fact, the next slide is about oil. You know, this is Marban oil, which is our benchmark oil. And you can see it had gone as far as $130 a barrel. That was in March. And now it has come down to about $93 a barrel. The expectation is that this will come down even more, to the point where we won't have to have the subsidies. You understand? So it's true, we eliminated the fuel subsidies on the I guess the super, etc., right? But on also the other products, including diesel, etc. So you have the price coming down, and therefore the gap is narrowing. So the pressure on the consumer and indeed on the government becomes less and less. But anyway, that's the expectation, but let's wait and see. Now we come to another set of items that is important for you, fiscal. I remember I talked about in that first chart, that first picture, and I really think that that picture has a lot. And I'll be, in our conversations in the future, I'll keep bringing up that picture. I talked about fiscal policies or the fiscal accounts, etc. And the idea that is one of the sails that are catching whatever is there, you know, the favorable winds, and pulling MV Kenya forward, or for that matter, any other country. So let's look at what is the overall fiscal performance through time. And I think the first place, we call it the fiscal balance, right? The deficit, as it were. And that is the red line. Generally, when we measure the deficit, we measure it against GDP. So it's not enough to say it is so many Kenya shillings, because the economy is growing. So you measure it, you scale it against GDP. And so, for instance, in 2020, 2021, which is 2 fiscal years ago, it was 8.4. So 8.4% of GDP. That was the deficit, and that's what we covered. I'm pretty sure most of you are familiar with this, because most of you are in I see people who are in the budget committee before, and other committees. You know, I also see, anyway, so I think you're familiar with this sort of scaling. But I think it is important to, what is important here? The blue is revenue and grants, also as a share of GDP. And then the gold is the expenditures. And you can see there's a sort of an increase, there's a wedge between them, right? And that is the deficit. So actually expenditures have risen. It's true, in later years, revenues have fallen as a share of GDP. That is the crux of the problem. Now, it didn't happen yesterday. You can see there was an increase. When I mean yesterday, I mean over the last, let's say, months or last year. You can see it had gone even in 2016, 2017, it was as high as 9.6%. And it came down, and so this indeed shows, if there was one chart that you want to say is the scorecard of all of us as a country in terms of fiscal performance, this is it. And one can say that things have tightened, meaning things have worsened in later years, but I think one has to understand why. And I think one of the issues towards the end is COVID. COVID required us, when we were dealing with COVID, it required us to spend a lot more, even as revenues were falling. Remember, the economy shut down in many ways, right? Remember, we didn't even have services. I told you services is now the leading sector. All those were shut. So in effect, we were in a sort of a quote-unquote survival mode. And I think the point here is that that's why the deficit increased. But now we have to take it back to where it should be. The next chart shows us what that means. So just to tell you more or less what this, so the red is the actuals. So remember I said that in 2020, I guess it was in 2020-21, fiscal year 2021, the deficit was 8.4. So that's the middle 8.4. And then the next year, which is the last fiscal year, the tentative number is 6.1. 6.1 is a significant improvement. However, there's a little catch here. This does not include the pending bills that may have been accumulated and not paid. So this number may need to be adjusted by that amount to correctly reflect the actual, let's say, commitment of resources that government took. But the direction is clear. The path that had been chosen or that has been chosen by government over time, medium term, is one that is the green one, is one that would bring us back down to stability less than in the order of 3%. 3% in 5 years. 3% of GDP, which is a sustainable place to be. So this, to me, is where you want to go. The issue is, can we deliver on it? And if we can deliver on this fiscal plan, consolidation plan, I think you would have achieved one of the, let's say, you'd be one of the largest successes for our country into the future, and indeed through time. Now, if we had looked a little more at the graphs that I had shown before, don't go back, but it's interesting to see that there has been moments in the past that actually we had strengthened our fiscal performance. So it is not impossible to strengthen our fiscal performance. Then we talk about debt. This is another topic that you're familiar with. Debt. The question is, where is our debt? Meaning, is it, how painful is it? You all know, and you've been told, as somebody was telling me today, that your own, let's say, in your own constituencies, you asked about debt. And people on the radio will ask about this. Here is a long series about the evolution of Kenya's public debt. Again, it's scaled against GDP. And you can see there was a time it was at 64%. That was in 2000, 2002, 2003. And then it came down to 38% in 2007, 2008. And now it's gone back up to 69%. Now, again, the question is, if you ask yourself, how much of this is domestic and external? Actually, it's about 50-50. That's not the consideration. The issue is total. It's closer to 60 to 70%. And the question is, can we bring it down? The answer is yes. We did that before. We did that in 2002. We brought it down to 38%. It took like 5 years, but like everything, it's all about being consistent. You don't run the marathon in let's say 10 minutes. You are there for 2 hours, and you are steady, and you train for it. That is what this is. This is a marathon, dear colleagues. Now, I'll mention a few things. Is it a problem? Well, it is a problem for the reason I didn't mention it, but I kind of alluded to it. When we looked at MV Kenya, the first slide that I showed, there was that debt issue. And I say debt is used to stabilize MV Kenya. So for instance, when we were going through the COVID-19 and basically we couldn't raise that much revenues, etc., the only way we could get away with it was to borrow. So we borrowed concessional funds from the IMF, the World Bank, it is 20, 30, 40 years repayment, 2%, actually less than 2% interest, etc. So very concessional. And that's how, so in a sense, it's like you also, when you're in a tight spot and you want to, so you can borrow a bit, but you want to be sure that you don't overborrow. So here's the case, and even personally, when you borrow, you have to get to a point where you say, oh, wait a second, I think I've overborrowed. And I need to be careful and begin to repay this, maybe begin to repay the more expensive debt, etc. But I think the first thing that happens is when you begin to, your repayment becomes a large share of your revenues. And this applies, for instance, if you borrow mortgage, right, a mortgage, right? And I'm sure, well, maybe it's not you, but the people that come to you, the people that work for you, and you advise them, you tell them, don't borrow. I mean, your repayment should not be more than 1/3 of your income. There's a general rule. This is a general rule, financial sort of management. 30%, right? No more than that should be going to repayment of loans, etc. So if you do that for the country, you get this so revenues is what we are earning, that's our income. And then debt service, yeah? So you can see there was a time it was 33%. It came down to 16, 15%. And now it's up, in the 50% range, above 40%. So clearly we are tight, yeah? So every shilling that we collect in revenues, 40 cents, or every 100 shillings, 40 shillings go to debt service. So you begin to ask yourself, but wait a second, what about salaries? What about medicine? What about building roads? So the point is, like, you would also need to worry about this. If you had this problem personally, you sort of say, hey, wait a second, I do need to, I'm not at a point where I'm falling, I'm collapsing, but surely I need to do something about this. So it's a bit like you or me when you go to the doctor and the doctor tells you, you're doing well, but you need to exercise more frequently. Yeah? And you don't like the exercise, but you need to do it. Otherwise, things will be worse in a year's time, etc. So that's really gives you a good snapshot as to where it is. I wanted to give you also a sense of where things are relative to other countries, but this I'll do very quickly. And it is this slide. The blue is the advanced economies. So generally advanced economies can carry debt much higher than us. So Japan, etc., they can all go much higher for many reasons. These are discussions that we economists love to engage in. But I think as of others, say emerging markets, lower, and sub-Saharan Africa, even less. Meaning our debt carrying capacity is not at the level of the others. And I think it's understood, right? Again, using the analogy of running the marathon. If I haven't trained enough, I cannot really keep up with Kipchoge. And Kipchoge will stay for 2 hours and he's running very fast. I cannot keep up with him even for 1 kilometer. And now if you have trained a lot more, you can stay with him for a little longer. So I think that's the sense. We can discuss it, but I wanted to tell you that not all countries have the same carrying capacity. And that is important for you to appreciate. What are the economic consequences of high debt? You know this, but I thought I would at least remind you. First, it narrows the fiscal space. So I explained it in the context of you have less room for other expenditures. And that is very important for you. Yeah? It's very important because your job is not just to repay debt. Your job is to make sure that the lives, and my job as well, is to actually affect the lives of the 50 million Kenyans that we are responsible for, that have given us the respective mandates. So that is important. Then, of course, it limits the room. We call it fiscal buffers, but it just means that at times you need to allow yourself to spend more than you are bringing in as in revenues. So like during COVID, we needed to spend more, but we didn't have room, so we had to borrow. So that sort of counter-cyclical policy, which is extremely important, is that room is limited. But importantly also, it increases the interest rate structure, or rather interest rate, basically. It raises interest rate, meaning you become, people are less interested in lending to you. You become higher risk from their perspective. And I think the point is that will end up ruining many things, including innovation, productivity, etc. Balance of payments. This is now talking about external. Again, this is the other, let's say, the other sale that I talked about, external sector. We've talked about the fiscal. I'm now talking about the external, and I'll talk towards the end about the financial. Exports have been growing okay, actually, quite strongly. Growing around 15%, over the, but I think specifically if you look at them, 2021, 2022, the only one that looks a bit odd is horticultures. And horticultures, actually the problem there was avocados. I'm an avocado farmer, and I know a lot about avocados. And the problem I understand is it's the exports of these things, right? It is, there was a problem with China now that has been fixed, so we expect this to reset itself, although I'm told that the problem with avocados, they've been stolen, yeah? So you go to the farm and somebody was there before you, the night before, I don't know how this works, but anyway, let's leave the avocados alone. And then imports have also been growing well, yeah? And I think it is important to note the largest growth was from oil, petroleum. Again, remember I showed you the graph of how high the price of oil had gone. So basically, oil has been the one that has been driving, pushing, even as exports have grown, imports have grown even more because of oil. Yeah. The others you can see, chemicals, manufacturers, all of them are showing that the economy is dynamic, meaning the economy is moving well, but I think the issue here is the drag from the imports of oil in various ways, as I explained. Diaspora remittances are an important component. That has been growing very well. This actually really helped us during COVID. Our fellow Kenyans out there sending money home, that has been strong. Now, I know the last few months, there has been, let's say, a stabilization, and indeed last month a decline, modest decline from 312 to 310 million US dollars in the month. And the reason for that is twofold. One is there's a general, let's say, seasonality. It will pick up as we go into the next, into October, November, December, as we do that, right? So there's seasonality, people sending money home according to the season, towards Christmas, school fees, those sort of things. I think we understand that. But another thing which we have seen, not just about Kenyan remittances, it's actually globally, is that the people in the remitting countries, and in particular the US, they are sending less money home because they're under a lot of economic pressures themselves. So the cost of living for them has really pushed them hard. But anyway, just something to note, and at this point we are still grateful to our brothers and sisters, wherever they are, that they are sending these remittances, which remain, they are much more important than any of our exports. Tea, coffee, horticultures, much more important. And I think that it is good to see that they still have a connection with our country. This is a long-term item that we need to talk about. Tourism is picking up. I think this, I don't want to say too much in the interest of time, but I think it has picked up quite well. And there was a time recently that I'm sure you couldn't get any place in any of the hotels in the coast or even in Masai Mara, etc. So those numbers are coming on okay. What is the bottom line? The bottom line here is that the current account balance, which is what puts everything together, so exports, imports, remittances, everything, then you have a balance, so like the bottom line, has been, we have a deficit relative to GDP of about 5, for this year we are projecting, well, last year it was 5.5% of GDP. And to July it's 5.1, and we are projecting that to be 5.9. Now, I always make the point that the sweet spot for us is 5%. So we are a bit on the higher side, but it's around where it should be. So 5.9 isn't a problematic thing, particularly because we are financing it through other means, capital inflows, portfolio inflows, etc. And you can see, as we say, tumetoka mbali, look at 2014. Yeah, 2014 was almost 10%, and even the year before. So I think the point I'm making here is that the current account is in relative balance, and the next slide shows you where we are on the foreign exchange. You can see in terms of US dollar equivalent, it had peaked at 8.8 billion, and now it is at 7.3 billion. But this is still like 4.3 months of import cover, which is relatively adequate. But you can see it has fallen from 5.2, 5.3, but we maintain it at around where it is, not so much because we are targeting anything, but because this is we in the central bank generate these reserves through the government's loans. So the government borrows in US dollars, and then we repay their loans in US dollars or foreign currency, and that's how we generate our foreign exchange. It is adequate, etc. The question which you have is, and you have been asked by others, but wait a second, why is the shilling falling? So, is it falling? Yes, it is falling. Is it falling dramatically? And that's where the issues are. Now, there's a slide that I'm showing you, which is it shows you the major currencies against the US dollar. So you can see all those reds, all those currencies, they are depreciating against the US dollar. And if you do one index of the major currencies against the US dollar, it's that index on the left, the green one that says 14.4. Basically, the US dollar has been strengthening dramatically against all other currencies. So US dollar is on one side and everyone else is going down. That is, I think, politically, and Speaker, you'll forgive me if I dabble into political words. That is the US economy might. Yeah? I said economy, I was going to use politics, There's a word about it, yeah? This is so in a sense, this is the imperial aspect of the US dollar. That's the politics I wanted to avoid, but I think you allow me to just say that. So yes, so you have the dollar strengthening against everybody else. Sure, even the euro, the pound, 15%. So I think the point here is we have to understand what is going on in all the markets. So when we ask ourselves, why is Kenya? Then we have this slide, which is our countries, or rather African currencies. And you can see that we are the circled one, we are at 6.2, so we have depreciated, and this is January to date. So we depreciated by 6.2. However, you have others, you have the Uganda shilling, it is 7.7, Egyptian pound, Kwacha and Cedi, you can see them on that side. And then on the other side, you have the Tanzania shilling. Nigerian naira. We can discuss each of these currencies, where they are coming from, obviously offline, because a lot of it, there are other things that are going on, such as where they were last year. So for instance, when you look at the Zambian kwacha, which is appreciated by 7.6, last year actually it has depreciated like by 20% plus. Any sort of significant, so that you can plan better, as opposed to it moving in one day by 2% or 10% or whatever else it is. So I just wanted to make the point, because this is an accusation that has been leveled against us in the central bank, that we are in some ways throttling the foreign exchange market. That's not true. What has happened is that at times the banks have been misbehaving. They don't always follow the rules. And so yes, we have had to deal with them to make sure that they follow the rules. They have certain responsibilities as in the market that they have to follow. For instance, make sure that they have two-way pricing, make sure that they provide minimum quotes for $500,000 US dollars, etc. So if that works well, then the market itself will provide itself with let's say the balance. It will be self-correcting and won't have an issue. But I think the point is that, particularly as we are coming into the elections, there are obviously some people that had other ideas. The fears that you have, that I have, that everyone else has, and in a sense, that's what we were, let's say, opposing in terms of making sure that the markets operate as they should. I want to finish quickly, so I'll skip some of these other slides. Just a word on this slide. The national payment system is so important to us. And we as Kenyans want to improve this national payment system. And we want to have a secure, fast, efficient, and collaborative payment system that benefits all Kenyans. And so there are some things we've done. We have a strategy which we can discuss, but it's available on our website, etc. I want to say a few words about banking before I finish, but maybe even I'll skip this financial inclusion slide. Let's go to the vision of the banking sector. And I'm happy to see some faces I recognize that we discussed some time ago, the maneno of interest rate caps. If you remember, we were adamant, we had differences of views, etc. We put it in place, you put it in place, and we told you it wouldn't work. It didn't work. We told you that there were some things that we needed to do. We put them in place, in particular this thing of the vision of the banking sector. And this vision is important because we say that we want, I'm not going to go into all the details, but we want a responsible and disciplined sector. So customer centricity is very important, which is a big issue. It was one of your key issues. And actually, as Kenyans, you know, we all want to be treated with respect. Customer centricity. The thing of risk-based pricing, this is important because if you went to a bank, they should not just look at you and say, well, okay, you are 12% or you are 23%. It has to be based on the risk of the project. And I think this is the big thing that we have been pushing them towards. And they are getting there. They need to, it's like learning a new language. You don't start knowing it. You do it in, you know, kidogo kidogo. Transparency in terms of interest rates, what they're charging, and also ethical banking. So that is a journey that we have already, that took off in 2019. And we have already begun to see significant benefits from it. For instance, how do I know this? Well, you know it. During COVID, if you had a loan that was performing, you could go to your bank and renegotiate and get a new loan or reduce the terms, etc. You know, we've never, in the 56 years that we have been in MV Kenya has been sailing, that had never happened before. That a banker has you sort of say, okay, you're making your loans, but you know, we can, you know, tutasaidia kidogo, and then they changed it a little, etc., to benefit you. And I think this is something that we should appreciate, would never have happened if the banks had not changed their outlook and felt that they have a responsibility to you as customers and to the country itself. I'm about to finish. The banking sector, growth in credit. I don't want to talk too much about this, but just to mention that actually it is now credit is available. It is true there are concerns. Some of you ask, well, they are lending to government, so they are crowding out private sector. That's not true. Yeah, they still have lending capacity, and they can lend you appropriately if you talk to them. Now, I want to finish, but really to mention just two things. Maybe not this one, but the next one, the slide of, no, that one, yeah. Because I'll send the slides to you, you look at it. So if I were to ask myself, what are the areas that we need your support in? Yeah, I think the first of this is we have a microfinance bill that we'll be bringing to Parliament. Really this is meant to strengthen the microfinance sector. We have to move from the old-fashioned microfinance. We need to go to microfinance, in my view, I call it 3.0, as opposed to where we are now, which is microfinance 1.0. So we'll bring that bill, we'll explain it to you. I think it is important in terms of reaching to some of the unbanked, and particularly if you also have this digital sort of platforms, etc. The other one is a big one, which is the designation of lawyers. This is all regarding the anti-money laundering sort of issues. And I think this is where we have to appreciate that we as a country, and we are not going to say why, we can discuss it offline, but we as a country have been, let's say, we've not followed what everyone else, including our neighbors, Uganda, Tanzania, Mauritius, whatever, have done. And this is a standard thing that we should be doing, which is designating lawyers as reporting persons. And this is something that was discussed in Parliament, and I'm pretty sure it will come back to you. At this moment, there is a stay because somebody, I guess, petitioned about its appropriateness, etc., and so it's stuck in the courts, but we do need your support here. And more generally, strengthening the anti-money laundering, combating of financing terrorism, the framework on that. And that is because we have just recently done the sort of a national assessment, national risk assessment, and also done what is known as a mutual evaluation of our implementation of our policies, which we would expect that you would support us in various ways. So, I'm about to finish. There has been some recent reviews of our economy. The things I said before obviously indicate some areas of that we need to work together, not just the people in this room, but I think also others, the entire, all arms of government, let's put all arms and all elements in government. But I think recently there were 2 reviews, and I want to leave you with this, which is a review by the IMF that was concluded in July. This is just before the elections. And they concluded that there was a strong recovery underway and that we were implementing the right policies. Remember, it's ourselves that chose those policies. That is one of them. And then more recently, one of the rating agencies, Standard & Poor's, affirmed Kenya's rating, foreign and local currency sovereign rating at B, and the outlook is stable. Now, this is again is the backdrop of them, let's say, revising down other countries that you know of. I'm not going to name them, but so I think the point for me is are we sort of in the ditch completely, irretrievably? The answer is no. Is there work to do? A lot. Do we know what we want to do? I think we do. I think we need your support. I think we need support by every person. All the 50 million Kenyans We need to rally around specific things, and we talked about some specific areas that need our specific push. And at the end of it, at the end of your term, in 5 years, we'll look back and see how far MV Kenya has sailed and how much the dashboard has changed in terms of the people. We talked about all those measures, but I think at the end of the day, in terms of the people. As I finish, I want to put out a simple example, which is, you see, it's not just about policies. One of the things that we talk about is poor people need to get money, give them money, etc. But I want to give you an example of a project that was started by KCB, and they were working, this is like maybe 3 years ago, a bit more, 4 years ago, and they were working with the Makueni County, and it was about raising chicken. So they provided financing to raise chicken. The chicken was being raised by, the smallholders, people who, Makueni, you understand, smallholder. By the way, I've told this to the former governor, Kibwana, and he was very excited about it when I told him about it, because I knew a lot about this. Anyway, the point was that they get the chicken, day-old chicken, they feed them, they are given feed, they are given the food to feed the chicken, they are given veterinary services, support services. I don't know how many weeks it takes. And then after those many weeks, somebody comes, buys them, or takes them away from them, and then slaughters them, of course, and they ended up in Carrefour. That's where they were being sold. The interesting thing is every farmer in this whole process, this chain that was there, was getting something like 11,300 Kenya shillings per month. And these are people who didn't have anything before. And that project, they started at 300 people, they ended up at 3,500. It had expanded to Kitui, to Kirinyaga, and I think Embu, those counties. The trouble is now it has fallen apart. We can discuss why it fell apart, but I think while it was running, you can imagine what 11,300, what that means to a family that doesn't have coffee, doesn't have anything else but that. And it was not financed. It was not financed by itself. It was finance plus, meaning they're supporting them. That, I think, is one of the things that, in my view, is a good demonstration of what you can do in your respective counties, in your respective jurisdictions, because you want to uplift the livelihood of the people that depend on you. Thank you very much.